Yo, what is up, chat? Hope you guys are having a fantastic Sunday. So, as you guys can tell, the star of the show is not here, but I'm gonna kind of talk about a topic that, I've talked about in the past, but I'm gonna really dedicate one entire video to this. Okay. And so I want to start off by saying I'm not perfect. Some of the things I say might be wrong. This is my interpretation of what I've studied and learned. Please let me know if you have a different belief and challenge my beliefs. I'm open to it. But okay, so as many of you know, if some of you know, I am a big Bitcoin fan. Okay, I love Bitcoin, and not to really justify why I like it, but I can realize that a lot of people that don't understand it or don't like it, either one, they don't understand it, like I just said, two, they haven't done any research on it. So if you ask someone that says, oh, that's whatever, you say, oh, what is Bitcoin? And allow them to explain it to you. If you can't explain it, okay, that's probably why. And the third reason, and which is the main reason, is people don't understand the problem. See, in order for you to understand the solution, you need to understand what the problem is. Okay? Because without the problem, then the solution seems useless. So today, I'm going to talk about our biggest problem, the problem that we all are facing, right? And so, yeah, this is going to share my screen for you guys. Okay. I think you guys can see my screen, right? Let me see. Yeah. Okay, cool. I'm gonna put myself right here. I don't know if you guys can see me or not, but anyways. Okay, cool. So what is the dollar backed by? Okay, the US government. Today, rather than gold, the US dollar is backed by trust in the US government, its economy, and its ability to generate revenue through taxes and debt. Okay, so it says rather than gold. What does that mean? Well, back in the day, before 1972, the gold dollar was backed by gold. Okay, but in 1971, there was something called the Nixon shock. Let me see. Okay, I didn't do it. Okay. The Nixon shock was pretty much a where they eventually got off of the gold standard. So this is when every dollar was backed by a certain amount of gold. But then when they debunked that, well, now the US dollar was not backed by anything other than the government, right? So what happened to the US dollar's value? So this is the term of what gold has done. So 2021 marks 50 years since Nixon closed the gold window. So the gold price per ounce, this is how gold has increased in value. And then you compare our US dollar. This is not how much it's grown in value, but how much debt the US government has gone into. So the drawback is that in the years since the end of the gold standard, there's been a significant and growing lack of discipline when it comes to government spending. Before 1971, there was a natural limit to how much money could be printed. New issuance were dependent on the amount of gold sitting in the nation's coffers. Today, with the dollar backed not by a hard asset, but by the full faith and credit of the US government, the federal debt is closing in an astronomical 28 trillion, which is more than 130% of the size of the US economy. Okay, so this is the price of gold. As you can notice, the debt and the gold were kind of like in alignment, right? And then boom, 1971 happened and boom, you see a jump in gold. Why do you see a jump in gold? Well, because there was more money being printed, so more of that money was being invested into hard assets like gold. But as you can see, this is the debt of the US government. So this is where it all started when everything started to go chaotic, right? So, and this is gold, right? This is the price of gold increasing as it is over the years. Now it's had a massive jump, but it just wanted to give it to you in a perspective so you can understand how vastly the government chose to print the US dollar. So understanding the national debt. So this is where we're at, 1971. This is where the Nixon shock happened when they depegged the US dollar to gold. And then this is what happened to the rest of our debt. Why? Because the government just decided they could just print. They didn't need any type of collateral to justify the printing of more money. So they just began to continuously print more money. So if you look, the value of the US dollar over the last 50 years. Well, at $1, look, in 1972, the point where the Nixon shock happened and they depegged it from the US dollar, Well, now the US dollar has depreciated 86% in the last 50 years. Okay, 86%. So I want you to think about this. Okay. So 86%, let's say you have 14 cents now, right? Because a dollar and then you lose 86%, you have 14 cents. Oh God. So I want you to put this into perspective. I'm going to stop sharing for a second so I can talk to you. So if you have $100 in your bank account and those $100 can buy you 100 apples, okay? But then in 50 years, you lose 80%, 86% of that. Well, if you were able to buy 100 apples with $100, that means each apple would have been $1 worth, right? Now, 50 years later, you have $100 still, but it's lost 86% of its value. How many apples can you buy? Probably a lot less. As you guys know, the price of things have gone up, right? So maybe that wasn't the best kind of breakdown and explanation, but what I'm trying to say is like the money that you've had in the past is worth less than it is now, right? So I want you to put this into perspective. If you had $100 and the government came in and took $50 from you and you had 50 left, you would be outraged. You would be like, what the heck is going on? You make chaos happen, whatever the case is, right? But if if now you still have that $100, but it can only buy you $50 worth of goods because the price of everything and inflation has gone up, so the purchasing power has gone down, everybody's fine because they see $100 in their bank account, and so they think, okay, I haven't lost anything. But in reality, the purchasing power is going down. So that's what I'm going to kind of talk a little bit more about. Um, so if I share this, we're going to see with the Fed, right? The Fed is the Federal Bank Reserve pretty much. And so the Federal Reserve does give money to banks primarily by lending to them through its discount window to address temporary funding needs and by purchasing securities like government bonds to increase banks' reserve balances. So, what are government bonds, right? What are treasury bonds and how do they tie in with the Fed? Treasury bonds are long-term debt issued by the US Treasury to finance government spending. So if you've ever heard of people saying like, oh, buy bonds, they'll give you a percentage of a return or whatever the case might be, you buying that bond and then paying you the interest over, because there's like, long-term investments, right? Like 20, 30-year bonds that you can't touch the money for 20, 30 years, but you get a 5% return every single year until the 20, 30 years is up, then you can withdraw your money. All of that money that you're paying to get the bond goes to the US government in exchange for the interest payments that they're giving you, right? And oh, excuse me. Oh my God, what I do? So then the government is using that money that is being lent by investors, and in exchange, they give them the interest rate, and then the government uses that for whatever it is that they're using. So where does the Fed get its money? Okay, so let me remind you, the Fed gives money to the banks. Then the banks are lending out bonds to get more money to give to the government. So you should ask, right? This is all an entire rabbit hole that I suggest everybody go do on their own. So the Federal Reserve, where does it get its money to give to the banks? So where does the Fed get its money? The Fed gets its money primarily from the interest it earns on the US government securities it holds. Okay, hold on a second. So you're telling me the money that the Fed is giving to the banks to lend to us, and then we pay interest on the money that they're giving to us. The Fed got that money from interest it earns from the US government securities it holds. Exactly what we just talked about. Okay, doesn't make any sense. Let's keep going. When the government pays back bonds, where does it come from? So when a government repays bonds, the funds comes from its general revenue, which are primarily collected through taxes. Okay, so the government taxes us on the money that we make, and then that's where the government pays back the interest that they're paying us when we buy the bonds. Okay, so I know it's very confusing, but that's why people don't go down the rabbit hole to understand what kind of mess we're in. Okay, so we buy bonds, they give us interest. Where does that interest come from? It comes from the government. Where does the government get the money? It comes from the taxes they took from the money that we made. Okay, so The value of the US dollar. What is the value of the dollar? So the value of the dollar is measured in two ways, domestically and internationally. Domestically, the value of the dollar is also known as its purchasing power. The dollar's value is tied to prices and inflation. When prices go up, the purchasing power of the dollar goes down. So, like the example that I gave you with apples, if the prices of the apples go up, well, then the US dollar, the $100 is less powerful because now you can buy less apples, right? So technically you still have $100, but the purchasing power of those $100 decreased. So it doesn't matter how much the numeric value of what your bank account shows, but how much purchasing power you actually have. So that's the domestic value of the dollar. And then internationally is the value is measured against the strength of other currencies, also known as the exchange rates, right? Other currencies in other countries, they've already lost their value. Like Zimbabwe dollars started strong, and then over the years they lost all their value. So now you look at a home and it costs 10 million Zimbabwe dollars or whatever it might be. I have no clue, but it's not necessarily that the house is worth so much because it's 10 million. No, it's because the Zimbabwe dollar is worth less. So now you need more of it to acquire the same value of the home. Okay, so why work for the US dollar if it's made out of thin air? You work for US dollars because they are accepted medium of exchange backed by the full faith and credit of the US government and are necessary for the economy to function. While the Federal Reserve can create money electronically, this is a controlled process, not a limitless one. And it has a purpose. The money has value because the government can tax, enforce debts, and global consensus exists, especially with the dollar being a major international reserve currency. So, in other words, why should we work for it? Because the government says so. So, this is the issue with this. When you look at homes going up in value, so to speak, in 2011, let's say one home was cost $160,000 and now that same home is worth $439,000. Well, people are believing that the price they're making a good return. Like, oh, this was a good investment. Like I'm making more money. Like my house is worth more. So now if I sell it, I can make a profit of 160 minus 439. Let's call it 250, right? It's a little bit more than that, like 270, whatever. But let me ask you this. If you bought one home for 160 in 2011 and you sold it for 439, that same home that was 160 grand that got you that type of home, let's call it a three bed, two bath. If you sell this home, can you now buy two homes for that are three bed, two bath that are the same quality of home as the first one? No, you can't. Can only buy you one same home. So did you really gain anything? See, the value of the home stayed constant from this point to this point. The only thing that happened is the US dollar became less valuable and the purchasing power went down. So you need more of it to obtain the same home. So one can argue the house did not gain any value. It's simply that the US dollar lost value. So that being said, when you're talking about things going up in a sense of value, you have to analyze, is this value going up or is the US dollar going down? Okay. So when I look at investments or when I look at something, I have to understand what is going on. So when there's more money being printed out into the marketplace, into the global economy, well, what happens is the prices of things go up because they now need to absorb all that extra money that has been pretty much released into the global market cap, right? Because it's all supply and demand. If there's more of the supply, which is the US dollar, well, the demand goes up so that you can absorb more of that money. Like that, I don't know if that was a good way to explain it, but it's like the reason why, like, okay, so you look at the S&P 500 as a 10% annual increase. Yeah, there might be some trend of going up, but the reason why these companies are making more money is because they're printing more dollars. So when the whole like what is it? What was it called? The stimulus check came about. Everyone was happy, like, oh, we got more money. There's no such thing as free money. Okay. The more they that's when they printed so much money and then everything got more expensive. It's like saying if it's like, oh, if you have $100 and you can buy 100 apples, I'm gonna give you $200. but I'm gonna raise the price of the apples by 3 times. Did you really gain more money? No, you didn't. It's just the value is losing because of more that they're giving out, the less it is. There's more out there. So they can continue to just print, 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 print. So the only thing, two of the things that I've seen in my lifetime to be very scarce is our time and Bitcoin. Everything else, there can be more of it. There can be made more of it. And so that's just why it led me to that. And then I went down the rabbit hole of Bitcoin and I fell in love with it. So this is not a video for you to invest into Bitcoin. This is not a video for you to find it. This is a video to expose the problem that we have. So now you can go and take all of this research and go down the rabbit hole to understand what the problem is and find your own solution. If you can find a better solution, I'm all ears. Okay. So understand what the problem is. I try to do my best to explain it, but I'm not an expert. I might have said some wrong things, but overall, the problem is the US dollar. It's not like there's so many people trying to find hustles to make it or to do like to have more money, right? The issue isn't making more side hustles so you have enough. It's the US dollar. Like if you could protect the purchasing power or maybe increase it, well then your efforts would also be increased so you wouldn't have to do all of this extra stuff. Like if I've made this example so many times, if your grandfather buried $100,000 in the back of his house and 20 or 50 years ago and he gives it to you now, he would have been better off spending that money 50 years ago than giving it to you now. That's not going to do anything for you. But it's not because there was anything wrong with the value that excuse me, there was nothing, the value that he was giving you was priced higher back then because the value of the dollar went down. So the value that he stored for you went down over the years. So you have to find somewhere to store the value that can be protected for the next generation or even for your future self. And clearly the US dollar is not the place to store a good value. So hopefully that all kind of made sense. I know it was a lot of information. But yeah, this is just the tip of the iceberg. There's still so much more to get into, but I didn't want to make the video too long. I just wanted to make it an introduction to open up your eyes to show you what the problem is and how you can find a solution for it. So, hope you guys enjoyed. Have a nice Sunday. Let's get it.